Now I'm going to start up the third chapter of your book, Shares and Dividend. Now in this Shares and Dividend, it is a new chapter for you. I mean to say you have not learned about it in your lower classes. So for that I have to tell some theory part of it first. How do you get a share? What do you mean by share? And what is dividend? That I'll explain you first. Now you see there are such big companies and industries going on. As you can say, it's Samsung, Tata, Reliance, and so on. So it is not possible for an individual to invest a large amount to start a company. So individual cannot invest so much. So 3 or 4 persons, 5 persons, 10 persons, they invest in a company and then they start the business. Now, according to the investment made by each person in a company, the company gives, for that the company gives the share. Share may have different values for different companies. And the one who buy the shares, they are called the shareholders of that company. So the person who has the maximum number of shares in a company holds the highest position in that company. And it is up to our choice to keep on buying the shares of other company or to sell the shares of the company. So this is called the stock market, which keeps on going on when the person buys or sells the shares of a company. Now the value of one share is decided by the company, which we call it as the face value or the nominal value. So if I write NV, it means it is the nominal value. And the other name of the nominal value is face value also. So this value, nominal value, is fixed by the company. That may be 5 rupees, 10 rupees, 100 rupees, 50 rupees. That will be the value, nominal value of one share. Now, what do you mean by dividend? Now, as you all know that if we deposit the money in a bank, if our money is there in the bank gives us interest. In the same way, when you are investing some amount in order to flourish a company, you are investing your money in that company. The company is going to give you dividend, which is the profit which you get on your investment. As you get interest from the bank, in the same way the company gives you dividend after a year. That we call it as the profit, or we call it as our annual income. So dividend is the profit or the annual income. Now as the bank decides the interest rate which is given on your saving account or the FD account, in the same way the company also decides the dividend rate. Dividend percentage is also decided by the company. How much in dividend rate they want to give. 5%, 10%, 8%, that is decided by the company. and dividend is always given on the nominal value which is decided by the company. Because suppose if the nominal value of a company is 50 rupees, but if the company is flourishing, so that is not going to remain as 50 rupees in the market. So in the market, the value of the share, each share will either increase if the company is flourishing, or it will decrease if the company does not shows a means income, great income. So market value keeps on increasing as well as decreasing. So the value of the share in the market, we call it as the market value, and for it I'll be using letter MV. Now if you are investing in a company, so I'm actually there are few formulae based on this chapter which will help you to solve the questions. For every question you will see that the formula which I am writing will be used to solve the questions. Now the first formula which I am writing is investment is equal to nominal value or the market value into number of shares. Number of shares. So what is the first formula I have written? Investment is equal to nominal value. Either you will take the nominal value or the market value multiplied by the number of shares. That is going to give you the investment which you have done in that company. Why I have taken both nominal value or market value? Because it depends whether you are buying the shares directly from the company. You are the first shareholder. If you are the first shareholder, obviously you are going to buy the shares from the company. But if you are buying the shares from the market, then you are going to take the market value. So nominal value is to be taken when you are the first shareholder or you are buying the shares directly from the company. So it's a simple formula to give you the investment. Suppose you are buying 100 shares. Number of shares you are buying are 100, and shares cannot be in fraction nor in decimals. It will be 100 or 101, not in between. Suppose if you are buying 100 shares and you are buying it from the market, and the value of that share in the market is suppose 10 rupees. So how much is your investment then? For one share you are paying 10 rupees. So for 100 shares you will pay 10 into 100. So that is why I have written the formula. Market value into number of shares gives you the investment. Now from this formula only you can also find number of shares. If the question asks you to find the number of shares, then investment or the market value will be given to you. So investment upon market value becomes the number of shares. And you can find the market value also. investment upon number of shares. So this one formula helps you to calculate the market value as well as the number of shares. Now second formula which I am writing is dividend. How to calculate dividend, which I told you is the profit which you get from the company or the annual income. So dividend is profit as well as annual income. So dividend is equal to dividend percentage which the company decides upon 100 because it is in percentage multiplied by nominal value multiplied by number of shares. So this is the formula for calculating the dividend. Dividend percentage upon 100 into nominal value into number of shares. Dividend is always calculated on the nominal value because it is given by the company. Whether the value of the share in the market is above the nominal value or below the nominal value, that company doesn't have to see. Now, the sometimes the market value in the question. Now, if the market value is value of one share in the market is above the nominal value, we call it that the market value of the share is above par. If market value is greater than the nominal value, then we say that the share is above par or the share is at a premium. If the market value is lesser than the nominal value, then we say that the share is below par or the share is at a discount. Now, for example, if I say the market nominal value is, this is the example I am taking. Suppose the nominal value is rupees 100 and I say it is available in the market at a premium of 20 rupees. If it is in the market at a premium of 20 rupees, then what will be the market value? 100 plus 20, 120. And if I say nominal value is the same I am taking, but if I say that the share is available in the market at a discount of 20 rupees. Now this is for premium rupees 20. If it is available in the market at a discount of 20 rupees, then what will be the market value? 100 minus 20, that is rupees 80. So if it is given that the market value is at a premium of 20 rupees, you have to add 20. If it is at a discount of 20 rupees, you have to subtract 20 in order to get the market value. Now the same premium as well as the discount may be given in percentage also. Now suppose if I tell you that the the nominal value is 100 rupees and it is available in the market at a premium of 2%. At a premium of 2%. Or suppose if I say at a premium of Okay, let us take it as a premium of 5%. So how will you find the market value? Market value will be 100 plus 5% means 5 upon 100 of the nominal value 100, which I have taken as 100. 100 plus 5% of 100. So 100 and 100 cancels out. The market value becomes 105. Suppose if I say it is at a discount of 10%, then what? It is at a discount of 10%. Then what will be the market value? Market value will be 100 because I have taken the nominal value as 100 minus 10% means 10 upon 100 into nominal value 100. 100 and 100 cancels out. 100 minus 10, it will become 90 rupees. So if it is given, the premium and discount are given in percentage, this is how it is to be calculated into rupees. Now I have already written two formulae for you, and I have also shown you how to find the market value if it is given in the form of a premium or discount. Now I'm going to write the third formula for you. Third formula is to calculate your profit percentage. Means whatever dividend you are getting. Suppose you have invested 10,000 rupees in a company and the company has paid you 500 as the dividend. So you want to convert this 500, which is your profit or the dividend or the annual income, into percentage. That how much percentage profit you have earned. That will be the third formula, which we also call it as the profit percentage or the rate of return. The formula for the rate of return or the profit percentage, profit is the dividend which you have got. You want to convert it into percentage. That will be the dividend which you have earned in rupees upon investment which you have done in that company into 100, because you want to convert it into percentage. So you are going to multiply it by 100. This is the third formula. And fourth formula, sometimes you may be asked to find because it depends. Market value can be calculated with the help of the first formula also. Market value can be calculated with the formula which I am writing now also. So that depends on what is given in the question. According to that, the formula is to be decided. Nominal value into dividend percentage, which is given by the company, is equal to market value into rate of return percentage. Means rate of return, which I have told you, that is a profit percentage. Sometimes dividend percentage is given in the question. Nominal value of a company is given in the question. Market value is given in the question, and you may be asked directly how much is the rate of return which you have earned. So you can use this formula. So these are the four different formula which I have explained you, and I have told you also what do you mean by share or what do you mean by dividend. Now in the next video I am going to take up few questions, and I am going to explain you some more terms also in between when I'll be taking up the questions.